Welcome to the channel where we dive deep into the financial markets to uncover the signals beneath the noise. My name is Sami DeLuca. Happy to have you on board. Today, we're taking a closer look at how the S&P 500, represented by the SPX, has reacted to the past 6 FOMC meetings. To those who don't know, the FOMC is responsible for overseeing the nation's open market operations. Basically, what they do is that they meet several times a year to discuss the economic outlook and make decisions on monetary policy. So these meetings and these decisions normally involve stuff like setting the interest rates to which banks can lend to each other. And these ones normally have an effect. They normally have an effect on the market. So today, we're going to review the past 6 meetings. That's going to be December last year, November last year. Actually, we're going to start with January this year, January 31st, December the 13th, November the 1st, September, July, and June, to see exactly how the S&P 500 reacted to those meetings. So let's go ahead and go to January this year, January 21st. As you can see, this is the date here. This is January 31st right here. I have it in this little oval. The FOMC meetings normally happen around 1 p.m. Central Time, so 2 Eastern. That's when the meetings start, and then Powell normally addresses the meeting at 1:30. So this is take a look at the week a few days before. So if you take a look, you're supposed to look at the trend. What's the trend of this market? This is SPX 1 hour chart. The trend is, I would say, is up. We're going up. We're on the uptrend. But on this day here, let me get this. Let me use a different color. So on this day here, this is the day before the FOMC. We can say the chart was on the outer channel of this uptrend. So this is a channel. We're going up. And on that day, the market kind of went to this level here. And it stayed there for a bit, and it tried to do a consolidation a little bit here. And when the meeting came, we're looking at the initial reaction at 1 p.m., 2 p.m. Eastern Time. There's big volatility right here. So big move down, and then another big move down to close the market. So we can say on January the 31st, the initial reaction was to the downside, still within the uptrend of the channel. So what this shows us is you need to know exactly where the market is. So you can try to, you don't want to anticipate the move. The best thing to do, if you're on January 31st trading this day, will have been to wait until probably close to market close. But you will still not know on that day. I think this market is still on the channel, on the bottom channel. So this is probably a little bit lower than it should be. But if you take a look on Thursday and Friday of the next 2 days, the market trended up. So I like to look the days before and the days after. So the days before, the market was up here, came down a little bit. So the reaction to the FOMC was down, and then came back here to continue. Let's go back to December. December the 13th, the FOMC is here. This is the day. If you take a look, a few days before, the market was already on an uptrend. So there was some consolidation a few days, or a few weeks prior. But on this Tuesday, the market was up. And then when the FOMC came, there was a small reaction to like a dip. and then a big move up, and it sustained the move. On Thursday, there was, if you are doing like short-term trading, you're supposed to get out quickly. So on Thursday, there was a little other dip, but we kind of stayed to the top. We stayed on this trend line up here. We stayed up here until, so this is on Wednesday, Thursday, Friday, and then Monday, Tuesday, Wednesday. The next week on Wednesday, we had a drop. So we can say the initial move was a big move up. So on January, the initial move was down, a big move down. December, a big move up. November 2023. So this is the FOMC date here. What was the market doing a few days prior? The market was going this way, up. So on the FOMC date here, at 2 p.m., there was a dip down, and on the same day, there's a reversal, and it continued. The reversal continued. So the prior days, the FOMC, the market was going up, just a small dip to react to that FOMC meetings, and it continued. This is December of last year. Let's go back to September 2023. What was the market doing? The market was on a downtrend. If you take a look here, it was kind of going down. What happened on the FOMC day? Big moves down, and then Thursday, Friday, and the weeks and the next days, it went down. It continued down, right? So it seems the FOMC so far, it goes with the trend. Trend up, goes up. Trend up, goes up. On the up, just a big dip, but continues up. Let's go to, this is September, we looked at that. Let's look at July 2023. So in this one, what was the market doing? We're going up. This is the FOMC time period. So the initial reaction was a big move up and then a big move down. Like there was so much volatility around this area. And if you looked at this market, it could have gone either way. So, but the thing is this, it went up on Thursday, Friday, and then it started going down again. So trading that volatility is a little bit risky, because if you can take a look at this area on during that time, you wouldn't have been able to tell, you know. So what this shows us is you kind of have to wait. And then let's look at June. The overall market was going up. The FOMC day, there was a big dip down, and then boom, continued. Thursday, Friday. And I'm just looking at those 2 days next, just for those doing the short term. And then let's take a look at where the market is now. I took this screenshot yesterday. The market was here, right? The market was there. So let's take a look at SPX, where it is right now. I took the chart, the market was right here. But now we kind of went already to the middle of the channel. So what will the FOMC do? Is it going to do that and continue? Or are we going to just, and this is the FOMC day, this is where we're waiting. So the best thing, wait until around after Powell has spoken, just to try to confound the trend. And this is if you want to trade the next few weeks. If you want to trade that volatility on that day, that's going to be risky. So you never know what's going to happen. So that's the analysis for the past 6 FOMCs, and hope you got something from it. Good luck and good trading.